Chat with Traders, episode 157, is supported by Birch. If you're someone who gives the credit card a good workout, then did you know the average person misses out on $300 worth of rewards every year simply because they're not using the right cards? A new app called Birch helps you get the most out of your cards and earn more rewards on every purchase. Download Birch, B-I-R-C-H, in the App Store and sign up for free today. Now, I've also been asked to put in the good word for Damon John. You know, the dude from Shark Tank, the Queen's entrepreneur who created a multi-billion-dollar company. He's now started a podcast of his own, and he's linking up with some cool cats. Gary Vaynerchuk, Tyler, the Creator, plus other musicians and athletes who I'm sure you'll know who have all outworked their way to the top. Subscribe to Rise and Grind in Apple Podcasts, Stitcher, or wherever you listen.
Markets, speculation, and risk. This is the Chat with Traders podcast, hosted by Aaron Fifield.
Hey boys and girls, Aaron Fifield here. Welcome to Chat with Traders podcast. Before I introduce my guest, I have something cool to share, which mostly applies to folks in Sydney, because I'm planning a Chat with Traders drinks / get together for Sunday, the 11th of February. At the time of recording this, I'm yet to lock down a location, but it will be somewhere around the city, the CBD area. So if you don't have plans for Sunday, the 11th of February, it would be nice to see you there. It'll be a great opportunity to meet other traders, etc. To find out more and to RSVP, simply visit chatwithtraders.com/Sydney. Now, moving along, my guest who you're about to hear from is someone who I featured last year on episode 119. It's Alex, or who you may also know as @TaggerTrades on Twitter. That's TAGR Trades. When Alex was on for the first time back in April, he was beginning to make headway as a full-time day trader since abandoning a secure job a few years back. But since then, he's really stepped it up a notch. Alex finished 2017 with a compounded return of 1,400%, with almost zero drawdown. Well, of course there was some drawdown, but it was very minimal, which, I mean, it sounds absurd saying it out loud because it is, but he really did it. Over the course of this episode, you're going to hear Alex and I reviewing his performance of 2017, what he did well, and the areas where he would like to further improve. Alex also talks about his strategy from scanning to entries to managing positions, plus psychology, self-discipline, and more. And at the risk of sounding cheesy, Alex is a good dude, and I really think he's a great role model for upcoming traders, especially those who want to trade equities on a short time frame. Please enjoy, and please share this episode on Twitter and Facebook so it reaches more ears. I'll be very grateful if you can do that. Here is my conversation with Alex. Search your email address, but anyway, nice to be chatting, dude. How are you?
Yeah, good. How are you?
I'm all right. I'm doing well.
Your weekend?
It is. Yeah, it's nice and early Saturday morning here.
Well, good. Start off on the right foot.
Yeah, absolutely. How was your day? All right?
It was all right. Yeah, I mean, nothing to write home about, but can't complain ending the week on a green note.
Nice. You survived. That's the main thing, right?
I did, exactly.
So I know there's been a few changes since we last spoke. I mean, you've got a little girl now, another member of the family. How's she doing?
She's doing good, man. I'm pretty lucky. My wife works from home, so she kind of gets to manage that whole aspect and kind of leave me to pure business. But sleep deprivation is no joke. Definitely not as much sleep as I used to get. But other than that, I really can't complain.
Okay. How old is she now?
She's almost 4 months.
4 months, right?
Yeah.
Okay.
So still quite still haven't gotten a full night of sleep in 4 months. Let's put it that way. So that's been fun.
It obviously hasn't affected your trading too much.
No, I think it might have got me into gear too, knowing that I got somebody else to support now. So
Exactly. Yeah. More responsibilities, right?
Word.
Actually, that's funny. I remember I interviewed Aaron Brown, must have been a couple months ago, and he actually spoke about sleep deprivation and said how it can actually have some positive effects.
Really?
Yeah, I'll link you to it.
If I don't get a good night of sleep, I'm pretty cranky. But definitely been going to sleep earlier to kind of make up for that. But
he said it like activates a part of your brain that is often sort of dormant.
Well, that's my secret weapon then, man. I'm that's what it is.
It almost like makes you more alert in some ways. I don't know. I'm probably getting this really wrong, but I'll link you to the episode. It might be interesting.
I believe it.
So what does your wife do that she's working from home?
Nothing, man. She's just a stay-at-home mom now.
Oh, okay.
Yeah, we're kind of doing the single income thing, giving that a shot. But I mean, childcare in the first place is like, I don't know, the translation of dollars were like $20,000 or $30,000 a year. So for her to go get a job, it would basically just to be like paying childcare anyway. So
I know, that's so crazy, right? Like,
yeah,
I've never really looked into it too much because I obviously haven't had to. But you know, the odd thing you hear here and there about how expensive childcare is, it's like you're almost just going to work to pay for that, right?
Yeah. And then it's a pain in the ass, and then it's just hard to manage everything else. So she's just at home kind of, I guess I run the actual financial side of the business, and she runs, I consider, like the back office. She just gets everything done, so I don't have to deal with it. So it works out for everyone. I like it that way.
Right. I like the way you put that. That's funny. All right, man. Well, let's get into things. I mean, obviously one of the first things I wanted to ask you about, and I guess just speak to you about as well, is what's been happening since we last spoke. So we first did the first podcast in April last year, 2017. And you've just been going from strength to strength ever since. I mean, it's been really cool to see. December last year, I believe, was your best month.
It was, yeah.
And I actually saw you say somewhere that December alone was better than the first 5 months combined of 2017. So let me just ask you, how come? What went so well for you in December?
So basically the first 6 months of the year last year was me kind of grinding it out, building up the account, getting it to where I had enough cash in the account that I could really, really put some force behind my trades. And I kind of walked into the perfect storm towards the end of the year with a whole Bitcoin blockchain stuff exploding. I didn't actually trade the cryptos themselves, but all these companies were popping up saying that they were getting into mining or the blockchain or something like that, and they were exploding. And I was just well capitalized and well prepared, and had I guess the training, the mess ups before, and I kind of came into it just better.
So can you maybe share a few of the plays which worked really well for you in December, like that were related to this whole blockchain mania that was taking place?
Yeah, so kind of like I remember last time we talked, at the beginning of the year was the shipper mania that was going on, and they all kind of ran together. There's always about 4 or 5 stocks in each sector that fuel off each other, and people think they're going to go from $100 to $100, and there's just so much speculation, and I'd kind of call it like a risk-on atmosphere where people are just chasing and going for everything and buying every dip. So it creates a positive atmosphere for somebody who's long biased. And there was a few companies that were pretty much just going up every day, and when they pulled back, they'd go. So there was one in particular, the ticker's MARA, and there's one's DPW and RIOT, and there's about 4 or 5 more. And any day that they opened up weak, you could almost kind of track them all together and see when one started getting bid up, the other 2 were not far behind. So it really gave you the opportunity to kind of be aggressive and use each other, use them as almost like leading indicators or things like that. So you could, I would wake up one morning and three of them, let's say all three of them were down, a few percent, but one of them was down more, and the other two turned green. Well, the one that I always traded was the MARA, and I was able to get in there with confidence. And as the other ones went, I was able to kind of hold those positions longer than I was normally. I consider myself kind of a cash flow, kind of a scalper, but those would allow me to hold them longer because there was just so much mania going on. I mean, they were making 50 to 100% moves daily. And so I was just able to get in and hold longer and put in more size. And there was so much liquidity. You could sell a lot of shares. There's pretty much always somebody there to sell to whatever you bought.
Yeah, it was crazy. I just remember, like, obviously wasn't trading this sort of thing, but I just remember like coming into work in the morning and seeing the headlines on Bloomberg about how this company just added blockchain to the end of its name, and now it's up like 100% on the day or whatever. I'm just like, what's going on?
Oh, completely ridiculous. Like there'd be biotech stocks that were clearly had drugs in the pipeline. All of a sudden they'd put out some kind of PR saying, oh, and now we're in the blockchain, and it would just explode. And it was the kind of thing that you were able to risk a little more on that, because there was so many other people that were just sitting. You could just tell people had their fingers on their triggers waiting for the next trade. So it gave you a higher probability to go for it. They didn't always work, and a lot of times they didn't. But when your odds are there, that's when you kind of put more risk on.
Yeah, and I really like how you've described this, because it's like, you've taken everything you've learned since you've come into trading, and it's kind of built up. You've had that really sound knowledge base so that you've been well prepared for the next time that, a catalyst like this comes into play, that, you can really hit it hard and make the most of it.
Yeah, I've botched 3 or 4 of these exact same scenarios in different sectors, different names, different everything. But they all pretty much end up the same, and they kind of work a little bit differently, but very similar. And I'd botched enough to learn what not to do, basically. So I can still definitely have a lot of improvement. There's no doubt if I could get better at holding longer, holding overnight, things like that. But baby steps, I'm getting there.
Yeah. But I mean, how long have you been trading for now?
June will be 5 years. So still, I would be probably considered a young gun out there.
Yeah, for sure. But how long have you been trading for full time now? It's not,
that's how long it's been. Yeah.
Oh,
so
okay.
I've been dabbling since, but by dabbling, I mean putting on like 3 or 4 trades a year and just being interested in the markets for, I don't know, 10 years. But nothing serious at all. Just had a healthy fascination, I guess.
Yeah. And like you said, you've botched a fair few of these kind of themes that come into play in the past. What did you do differently this time around? I mean, obviously, like we just discussed, you were a lot better prepared, but what are some of the mistakes you made in the past which you perhaps didn't make this time around?
Preparation. So knowing the names, I wouldn't say inside it out, because I try not to fall in love with any single one of them, but knowing what's going to launch the next one, knowing which ones are the leaders and which ones are the laggards in the sector. Because what I used to always do is I would always just go for the laggards in the sector and try to play catch up. But a lot of times those are the biggest dogs. And I really focus this time on trying to find the best few and being one of the ones that was the front runners on them. And so trying to not wait and catch the last few percent, I was trying to get the majority of the percent on them. And then also knowing when the party stops. That was a big one that hurt me in the past, where I would do well. Let's say it was a 2-week period, and do really well for a week and a half or a week. And then I would just hold on too long, or buy too many dips, or give up too much of that phase. Well, this time I didn't catch the last couple of days of craziness. I just kind of thought it's a little too crazy, a little too hot. It's time to back off and just protect the profits now and go for much shorter trades. So if anything, I guess that was probably the biggest thing, is knowing when to back off, because you always hear it's easy to make money in the market, but it's really hard to keep it. So knowing when to take the foot off the pedal, and then when to apply it back, because as soon as they run, they pull and they'll do a second run, and just kind of getting the feel and the flow and riding the wave versus, I guess, getting hit by the wave.
So I'm sure we'll get into this a lot more as we get going, but in this particular instance, as the blockchain mania we're talking about, how did you gauge when to get out of these stocks? Like, how did you know when the party was over?
It kind of sounds funny, and I've seen it, other people talk about it, but whenever you get texts from your friends and family that want to get involved and they have never traded before, then okay, the whole boat is loaded one side. Everyone wants to be long these names. And that's when it gets dangerous, because at some point the buyers are going to run out and the sellers are going to take over. And it's a healthy part of the market that obviously there's shorts that are on the other side. So it's knowing when there's too much optimism, and it's, I guess it's a mixture of technical analysis by looking at charts and just saying it can go further. There's no doubt it can go further, and it can always go higher. But at some point, the risk reward just isn't there anymore. And when you're looking for what's the next push going to be, it becomes less and less likely that it's going to continue. And like I said, I did miss quite a bit of it, so I didn't time it perfectly by any means. But there's a point when you kind of have to stop. It's not so risk on anymore. It's a little bit more defensive.
Yeah, but I think that's an interesting point that you raised, because you say you didn't capture the whole move, but you obviously captured a decent chunk of it, and as a result, you had the best month out of the whole trading year.
Exactly. Yeah. And it comes down to looking at that month, even if you broke it down day by day. In any week period, it was really like one day or even 2 days in the month that just really pushed over the edge. And the rest of it was just being there, hitting base hits and just taking what's there, but not going for too much. And I mean, I'm sure there are people out there that just slammed it and did way better than me. And maybe I'll be there in another 5 years. But where I was now I was very comfortable with what I was doing.
Well played, man. Well played. Now, you've shared your I guess you could call it your equity curve. I've seen you posting that on Twitter, and it's just incredible to me how consistent you've been. Like, it's such a smooth equity curve. How have you been able to achieve such great consistency?
It looks really stretched out, but if you look in there, there's still quite a few days where there's just not much I can get going. So there's, again, if you look at any month, there's some days I don't even place any trades. But when you look at the grand scheme of things, it's the days that when not to go for it, that were my biggest mistakes in the past. Where let's say I just had a bunch of good days and I just kept pressing and pressing and pressing. Well, now I just kind of know that there's being okay with periods of not doing anything, but still being there in case something comes up. I don't just have a couple good days and walk away. I'm still here, but being okay with knowing that I don't come looking for something to the market. And I think that was really, really big for me last year. Being okay with just kind of letting a half a day go where there's no trades, or a couple days, and not forcing things, and just really waiting for, and I know I talked about it the last time we talked, kind of the A, B, C setups. There's days that you can go for C's setups, and when risk is on and when risk is not on, you really just got to be patient and go for the A's, and maybe just take a couple bucks here and there. But when that compounds, that was the big thing that makes that chart look really awesome, is compounding, that the size just gets a little bit bigger. So your small days just get a little bit bigger, and just protecting to the downside. And risk management is always my probably the thing that I guess is my Achilles heel from keeping me to get like the outrageous huge percent win days or dollar days, I guess. And just staying consistent, staying focused, and trying to stay disciplined.
How often would you say that there are days which you don't place any trades? Like, are they pretty few and far between, or maybe more often than most would think?
I would say more often than most would think. This year, I've only had one day where I placed 0 trades, but I've had a couple of days where I've done 1 or 2, and they've been not much, and I've just had to be okay with it and just accepting it and just moving on, and not letting it fluster me, or not thinking I have to come back the next day and go for more. Try to play catch up. I let the longer term numbers speak. So I would say in any given month, there's probably 2 or 3 days where I literally sit at the screen from open to close and don't click any buttons at all. It's hard.
Yeah, I think that definitely is hard for a lot of people. That must be something which, you've learned how to do. Like, I don't think that comes naturally, right?
No, not at all. No, that was the thing. I mean, it's the day that I wouldn't wait. The day that I put 0 trades on is the day that would have been a week killer, or, would have taken 2 weeks worth of work away, just taking the step back, and it happened. And that's why I do it now, because I've done it. I've stepped on the landmines, and now I'll just rather just wait it out, and be not aggressive. And I do let things pass. And there are things that I could hit on those days, but it's just got to be selective.
Yeah. There's that saying, how does it go? It's like, you're better to be out of a trade wishing you were in a trade than to be in a trade wishing you were out of a trade.
100%. And there were times that whenever I was posting my P&L every day, and there'd be days, and that's kind of around our last conversation, that I wouldn't have much. People say, "Oh, how come you didn't hit this? How come you didn't have that? Did you not see that?" And I can't hit it all, man. I'm here. I'm not perfect. I miss a lot, but it's just that selectivity, I guess, that is probably, I guess, one of my edges.
Yeah. Now, looking at your equity curve, very smooth, like I mentioned, you wouldn't be able to tell that you'd had any kind of significant slip-ups or anything like that, but has there been any slip-ups or substantial mistakes which you've made since we last spoke, 8 months ago?
Yeah, it seems to be the same thing that happens to me every so often, and luckily it's been spreading out. It doesn't happen as often, but this year it's happened. I have had one red day so far this year, and it all stems from when I kind of get in this flow trading state, and I'm just kind of working, and I have maybe some trades on, and I make an error, and the stocks that I trade, they're under $10. They're considerably low float. There's liquidity issues involved sometimes, and what happens is, let's say I put in a wrong order. For example, what happened this year was I was pretty full size into a trade. I got the breakout I was looking for. I thought I was scaling out of the trade, but was actually adding size into the trade. And by the time I realized it, the trade was over, it broken down, and I get in this almost this flight or fight reflex where I try to battle it, or I try to wiggle my way out, or I try to outsmart the market or something like that. But there's no one there to buy the shares that I accidentally bought. And I take a much bigger hit than if I were to just say, dude, you made the error, put your market order and just sell out and take the loss. And I let it snowball. And that's happened probably about 4 or 5 times. And that would be my current fatal flaw that I'm working on. It's easy. I have it written down. It says, Alex, if you get into a trade you don't mean to, just mark it half out. But when you're in the heat of the moment, sometimes your brain just kind of doesn't work.
So what are some of the traits which you can attribute to you making money as a trader? Like, what are some of the things which you've actually tried to do really well? Like, is there a short list of things which you've really tried to focus on over the past, 8 months, 12 months sort of thing?
Yeah, I would say, and I have a whiteboard in my office, and I have something written down. The three things that I'm really, really working on to get better. Better preparation. You hear it a lot. I mean, there's preparation in the market, before the market, during the market, after the market close. Just getting better at, and something I do much better now than I have in the past. But having a system in the morning that you follow every single day. Sometimes when I have 3 or 4 really good days, I think I can cut a corner and I don't have to do something in the morning, and then the market opens and I miss out. And it's definitely something that I've improved on, but I'm still working on improving. And then having a clear criteria to hold longer. I'm in this. I get in this short-term scalper cash flow mentality that I let a lot of really big trades go, and I have to watch them from the sidelines. And that's just one of my big flaws. And then I'm also working on getting bigger size onto trades. But also, when you do that, you can't just get bigger. You have to get better. You have to be able to read the order book, know kind of liquidity and all those kinds of things.
Yeah, absolutely. Especially in the stocks that you're playing, right? That's even more important.
Yeah, totally. And I remember somebody told me that last year, as I saw my equity curve going up, they said, I don't know if you know this, but you're going to hit to some point where the game's going to completely change because you have to almost think one step ahead. And I was like, yeah, I get it. And then, then you get there and you go, yeah, this is what he was talking about. That you really have to be careful because, you can't, just because you have more money in your account doesn't mean that stocks care, that you can take all the shares. And if you don't have somebody there on the other side to be there, you can get into some serious trouble.
Yeah. I know a lot of people are probably listening to this right now and they're saying that that's a good problem to have, though.
Yes, it's something that's going to have to continue to get harder and harder. But it's even harder when you're starting. You have a small account. You are much more nimble, but there are times that you think you can get aggressive or not, and you don't even realize that there's that issue there. That there's not always a bid behind you, and you go, oh, how come I can't get out of the stock? That's happened to me before. How come I can't sell it? Well, there's no one there to buy it from you. So.
One of the things you mentioned just before was having like good preparation before, during, after the market. And you said, when you have a few really good days, sometimes you feel as though you can cut corners a little bit and sometimes become a little bit complacent. But, you said it's important to follow some sort of routine. Would you mind sharing maybe your pre-market routine?
I am. So for my time here, I'm Central Zone. The market opens at 8:30 in the morning. Some guys wake up really, really early and they trade in the pre-market, but see, I don't at all. So I usually wake up and start to kind of take a look at markets about an hour and a half before they open. First thing I do, I know most blogs and things like that say don't check your phone first thing when you wake up in the morning, but that's the first thing I do. Check Twitter, check the news. The night before, I have a watch list ready of the stocks that I'm interested in, and I like to kind of keep updated on the news. So if we're looking at, the end of the good month last year in December, I had my names of stocks that I was watching that I was familiar with. Which names are now saying they're involved in blockchain that have nothing to do with it. You really want to know those things, and you want to know them before the market opens, and you kind of want to be familiar. So I have my watch list, and I have on my screen about 12 charts that I'm watching. And one of the things that I've really worked on is kind of having an organization, because that's a lot of data to watch. So when I come to the market, I want to know where my charts are, which ones have to be watched right out of the open to get trades for, which ones need to set up a little bit longer, and having a plan for each of those, but also being familiar with what their daily charts look like, where the closest support and resistance. That's a lot to take in. And that's something that I'm still getting better at, but it's having a plan, and then at the same time, being really flexible, knowing that as soon as the bell rings, your plan can go upside down. One PR comes out and it changes everything. If, like I know they were saying I think it was like South Korea was going, gonna try to make trading cryptos harder, and it just changed the entire game that day. So no matter how much homework I did, no matter how prepared I was, what I had written down on my notepad, it all doesn't matter at that point. And you have to be flexible, but still be prepared. And I think if you're prepared, you can be flexible.
That particular example, where are you getting most of your news? Like this South Korea announcement about trying to make trading cryptos harder for people who live there. How did you receive that information? Like, where do you get most of your information during the trading day?
Twitter is a beautiful place. There's a lot of great information on there. It's one of the nice things that you can curate what you do and don't see, because there's a lot of garbage, there's a lot of good stuff. So following the right people on Twitter. I also have 2 news feeds that I pay for. They have the actual news that scrolls, and they also both have squawk boxes, which is really nice. So they read out the news, because a lot of times when there's a lot going on in the mornings, there's all these trades happening and you're tracking a lot. It helps to have the news read out to you. So if something you're trading, all of a sudden they say, oh, they're just filed for, either something positive or negative, you can right then and there make a decision versus missing something because you don't have eyeballs on it.
Okay. So what are those 2 services that you pay for?
One of them is called Trade Exchange, and the other one's Zynga Pro.
Okay. So Zynga Pro is the squawk?
Yes. And so is Trade Exchange. They both have squawk services and news services, and they do cost money, but basically I take a look at how much it costs and how much it typically makes me, and those services typically make me a lot more money than they cost. Yeah.
Sometimes you've got to spend money to make money.
Right.
Okay, and those are purely sort of equity-based services?
Exactly. Yeah. So I'm sure I know there's certain ones for people that'll read more Forex news and different kinds of services, but these ones are pretty much geared towards what I trade. They also talk about stocks that I don't trade, Apple, Amazon, etc. But they also have breaking news on a lot of small cap stocks, which if you can hear it and hear it first, that's a huge edge in the market.
This episode of Chat with Traders is proudly sponsored by HealthIQ. Here's the thing about HealthIQ. They want to encourage people to lead a health-conscious lifestyle. And as a life insurance agency, they figured the best way to do this is to offer fantastic rates to people who exercise frequently, live an active lifestyle, enjoy getting in the gym, maintain a healthy diet, etc. It's these things which HealthIQ reward. To back this up with some statistics, 56% of HealthIQ customers save between 4 to 33% on their life insurance. And these savings are exclusive to HealthIQ. To see if you qualify, get your free quote today at healthiq.com/chat or mention the promo code CHAT when you talk to a HealthIQ agent. That is healthiq.com/chat to get your free quote. Now, going to the other end of the day after the market closes, I remember last time we spoke, we spent quite a bit of time actually talking about how you're journaling, how you're reviewing your performance each day, each week, etc. Is that something you're still really big on, or have you dialed it back a little bit?
I'm still very pro journaling and tracking all of your trades, but I'm not currently tracking like I used to be honest. I think it's a great thing. For me, it was all about finding those where my high probability trades were, where I was losing money, where I was making the most money. I took that data and essentially now I'm not journaling. I'm still journaling kind of notes on the trading day, but not tracking every single one of my trades because it became such a habit that it was almost like I could do it on my own. And I would still go back to it at some point. Let's say my strategy just completely stopped working. I couldn't make money. I couldn't figure anything out. I would dust that thing off in a heartbeat and get back to work. But it really got me to where I was comfortable doing it on my own in my head.
Okay, that's interesting. And as you've grown your account over the past 8 months, 12 months, etc., has that taken some psychological adjustment? Because I presume that your P&L swings during the day are a lot bigger. You know, there might have been a few $100s at the beginning of 2017. Nowadays, there might be a few $1,000s each way. Has that required some psychological adjustment to get used to that sort of thing? Because, you know, it's not a small amount of money you're throwing around. Yes,
it really has, because I consider myself a somewhat simple person outside of the markets. I'm not a big spender. So having trades, you know, that are both positive trades are great, but it's those big losses that still hurt. I mean, and what used to be big back in 2017 is much bigger now number wise, but it's around the same percent wise. But it's still hard to swallow whenever you see, you know, you're down $2,000 or $3,000 on a trade. It's still a tough pill to swallow, knowing that what could you do with that? And then on the same side, on the flip side, sometimes, and this is something that I have to work on, is that when I have a couple really good trades and I put up a big P&L in the day, I have to remember that there's still only maybe 1 or 2 days in a month that really make your month good. And I can't just get up and celebrate and call it a day, or just get excited and start slipping up. Really have to be careful on both sides. But as far as psychologically, I know this was one of the questions that was asked on Twitter a lot, like how much of your account do you risk per trade? And just because my account's bigger, I still don't ever really go all in or put my entire account in there. But I have been working on slowly being more comfortable putting more size on. But I'm a much more slowly raising that than just saying, okay, I'm going to double my size the next day.
Okay, so if we were to look at it from like a percentage point of view, you're still risking roughly about the same percentage of your account as you were when it was smaller.
I am, and one of the things that I might do differently than most traders, and it maybe call it good or bad, is I truly don't say I'm going to risk 2% on this trade or 3%. I typically have a setup that I'm looking for, and I don't know if it's just become natural, the size that I take, but if a trade's not working, I'm not going to let it get to that max, let's say 2 or 3% loss or whatnot. I really just let the trade work as it's supposed to. And I have gotten comfortable with it. So if I'm trying to trade a breakout, I don't set a wider stop than I need to. Sometimes my stops are really, really tight and I don't really technically risk a lot other than the fact that there's liquidity issues and slippage and things can change. But my potential losses are larger, but on a percentage basis, they may even be getting tighter because I'm actually improving my entries and my exits, if that makes sense.
No, it does. It does. It makes a lot of sense. Now, you said a little bit earlier about how it hasn't really become an issue too much for you now, but it's something that you've been given a little bit of consideration to, is that, some of these more low float stocks, when you're trading larger size, you can have liquidity issues and some significant slippage. Have you been thinking much about stepping over to more of the larger cap stocks? Is that something which interests you, that you think you may work your way up to at some point?
It is. I've kind of dipped my toe in a couple times trying to see how I kind of read the small cap markets translates exactly over to the larger cap markets, and it doesn't exactly, because the percent moves are much smaller, but the dollar numbers are much bigger, and it's similar. But I keep telling myself that I'm going to have to make that jump at some point. There's going to be a certain period where I just keep getting too much slippage, or I can't grow the way I want to grow. But I haven't gotten there yet. And I try to kind of keep my eye on the prize right now, or on the ball, which is just the next day. And I actually, had a conversation with one of the traders you had on here, Bryce Edwards. I reached out to him because I was kind of preparing myself for that issue, I guess, before it got there. And I was looking at either starting to try position trading or swing trading or expanding my book. And he just hit me with some truth that was, just keep getting bigger at what you do well, and just keep pressing and getting better at what you do. And I've done it so far and it's worked, and I haven't had to change. And I appreciate those comments. But I know it's going to happen at some point, but I haven't gotten there yet.
Yeah. I remember last time when we spoke, you said that you were interested in, lots of other strategies as well, as you develop as a trader. Like you were saying that, it'd be good to eventually be able to trade like some trend following strategies and some more like longer term position trades and that sort of thing. That's not really something you've gotten into yet?
I've tried. I've tried paper trading, just the good old fashioned way, on a literal piece of paper, writing, okay, here's where I would take a swing position. Let's hold it overnight and see what happens. And my accuracy is just, it's not very high there. I'm not comfortable with it. I don't have confidence in it yet. Maybe one day I will. Maybe one day I'll put my head down and really try to work on it and hammer that in, because I do think that's probably the next step. Maybe, again, I don't know. I'm just speculating, but that may be the direction I have to go at some point. But I'm having a lot of fun where I am right now. I'm pretty low stress, so honestly, I'm almost thinking that at some point, if I did have a liquidity issue, heck, I'm doing pretty well for myself, so maybe I can just continue to, I wouldn't say plateau, but just get a little bit better on what I do.
No, I think that's really important, and that's, I think because a lot of the reason why you've done so well is because of that, because you found something which you're good at and you just focused on it, right?
Right.
Like striking while the iron's hot, as they say.
Yeah, and I get this question a lot from people. They say, "Oh, you're a long bias trader in a really big bull market. Well, how do you know? How do you know you're still going to be successful in a year or two or three?" And the answer is, I don't. Things completely change upside down and a flash. And all I know is kind of what got me here. And going back to like the journaling and tracking trades, and I have to only assume that if everything that I know just stopped working, but the market still traded, that I could readjust and I could find something that worked, and I would have to start backwards, and I'd have to set smaller goals, and I'd have to work my way back up and be patient and be ready to fall and stumble. But as of right now, I'm just trying to get better at the few things that I'm good at.
Yeah. I mean, I have complete confidence that you would be fine. I mean, you've got to trade the market that we're in. Last time we spoke, you were that was one of the interesting things which we spoke about actually, is about how you do play the long side. You're trading these low float stocks, and most of the guests who I've had on in the past who trade this market are very short biased, where you predominantly trade the long side. Is that still the case, or have you started to take more short trades, or is it something which is still not really of interest to you?
I'm slowly creeping over to the dark side. I would say last time we talked, I was about a 98% of the time long trader with just every once in a while I would short. Now I'm still, I would say 85% long side, and I'm dipping my toe, I would say a 20th of the size I trade on the long side, trying to get comfortable. And what I was doing before was I was trying to short things that I wasn't really familiar with. I don't really know why, but just like I'm kind of focusing on the Bitcoin sector at the end of last year on the long side, I was also aware of how they moved up and down. So I was trying to kind of flip the script a little bit and work a little bit on the short side, but it wasn't a huge profit bucket for me. I wasn't making a ton on it, but I'm hopefully going to be increasing it a little bit.
Okay. So you'd say that still about 98% of your trades are long?
About 85%. I'm getting a little bit more, about 15% on the short side now, I would say.
Okay. And as you're kind of less experienced playing the short side, how have you been treating that? Like, have you been taking much smaller size on those trades?
Yes, much smaller size. My emotions, I don't really have them in check because I just have this, I don't know if you want to say natural fear, I guess, of just getting caught in something outrageous, which happens every once in a while. So I take much smaller size. I give myself one bullet in the chamber. So I'm not going to add and get myself into something bad. I basically said, I've got one shot to pick a good spot and you got to stick with it. Set your stop. And it's a work in progress, to say the least. It's profitable overall for me, but it's nothing big. And the thing I also don't want it to be is a distraction on my long side. So I kind of, I only kind of shift towards that when I really feel there's just not much on the long side.
Okay. Now, Alex, when you posted on Twitter yesterday, I think it was, that you were going to be coming on and did anyone have any questions? One of the questions which kept popping up over and over again was, how are you scanning and identifying these stocks which may offer trading opportunities? So obviously, when you hear about these blockchain catalysts which are coming into play, it's kind of hard to miss that sort of thing or to not know about it, right? But when there's not a catalyst in play or a catalyst which to the same magnitude, how are you finding stocks to trade on just a regular sort of day?
Yeah, so it's good you differentiated that, because scanning when there is a catalyst is almost just being at the market, seeing what's moving, being familiar and having that list of the top 10 names that have the most volume. But, when the market does slow down, and it will slow down, and it goes in phases, and let's say like August of last year, I remember everybody was just saying, oh my gosh, there's nothing to do. Is the market done? And it just, it slows down. So at that point, you do have to do some scanning. And so what I do, and I don't know how the different sites work for different countries and different exchanges, but we have a site, FinViz. I don't know how you pronounce it, but it's a free site, and it allows you to search every single stock. And you can kind of break it down into really complex search terms for people who like fundamental analysis. How much do they earn? What's their debt ratios, et cetera, et cetera. But then it also has technical side. And so I keep my scanning pretty simple. I like to look for stocks under $10 because that's where I, at the time, and I still do now, have my expertise, I guess you could say. And then the one thing that I know people talk about over and over again is how important volume is to trading. And it took me a long time to realize why, but I scanned for stocks under $10 and stocks that are trading at least 2.5 times their daily average. And the reason is you can scan for amazing charts all day long. And you can find a great chart. And this is what I did a lot when I started, was I find a great chart, 10 great charts, and I'd trade the wrong 3 ones, I guess you could say. Nothing, it didn't go anywhere, but it was a great chart. But that doesn't matter because other people weren't watching it. There wasn't other people that wanted to get involved. There wasn't other people sitting with their fingers on the trigger waiting for that entry that wherever they're looking for. So when you scan for charts, it's really important to look for volume and look for above average volume, because that means people are getting interested or it's people are already interested. And that's something you want to watch. And it's free. And so it usually brings up a list of, let's say, I don't know, 20 or 30 stocks that are trading above average volume at under 10. Then you can start breaking down, how do their charts look? What are their catalysts? What sectors are they in? And then let's say there's 10 that you find that have good chart setups. I would move those over to my watch list and I would arrange them based on, the ABC setups where, the A would be, it's a great chart. It's in a great sector. It's got a low float. It's got a high short percentage. It's got, all these little things that you want to look at, whatever you care about. And you kind of arrange those. And that's how I set my priority. So when the day starts, I know that the top 5 and I know the bottom 5, and those bottom 5 sometimes are the biggest winners. You got to keep your eye on them. But that's how I do my scanning, and it's really nothing crazy.
So once you filter it down, you end up with about 10 names to watch that day.
Well, I guess if it's a slow period, sometimes there's only 3, 4, or 5, and that's sometimes a good thing, because that means there's a higher percent chance that everyone's going to get fixated on 1 or 2 of the names that you're watching. So I would say usually you can find, even in really crappy markets, you can find 3 names that are trading above average volume for some reason.
I think it's really cool that you still use FinViz. Even at this point, you're using like a free tool. It's really cool.
Yeah, I mean, I'm sure you could probably pay for something a little bit better, but I mean, all you have to do is like watch a commercial every once in a while, and then you can just X out. And so,
no, it's a very comprehensive scanner. I mean, I occasionally get emails, people asking, and that's usually the one I suggest.
Yeah, and you can set it up really detailed. And I have some detailed scans, and I found that simple works.
Yeah. And you said daily average volume. You like to see stocks which are 2.5 times the daily average volume. That's the average over what period? Like the last 10 days, or?
That's a good question. I want to say it's 20, but I'd be lying. I think it's just whatever's standard in there, to be honest. I haven't really messed with that. But then sometimes if that scan doesn't show anything, if the market's like really dead, sometimes you kind of have to take it down a notch. But when everything's going, and your list is too long, you just kind of increase that. And that's just showing you where are the eyeballs, basically. Where is everyone else looking?
And to what extent do you care about the broader, higher time frame trend? Or are you only focused on intraday price action?
I always start with a daily chart. So when I'm scanning, that's where I look. I probably could zoom in more like on a 1 hour, because I am such a short time frame. I'm basically trading an intraday breakouts, and I don't look back, let's say, a year and really care about like what the high levels of resistance and support is. I'll look back maybe 20 days and see what the support and resistance there is, because that's where the people that I'm typically doing business with and transacting, that's where everyone's focused on. So I typically start with the 1 day chart. And then now I've been really, really focusing a lot more on the 1 hour chart, because it's even more zoned in to where I'm concerned with support and resistance is. And then I focus intraday on the 3-minute chart.
Okay. So you're not trading off a 1 hour chart, are you?
Right. No. So that's kind of where, when I talk about I'm trying to get better at having criteria for longer term trades, I like to know that the daily chart and the 1 hour chart is lined up in some sort of way. And that would allow me to hold longer, but I'm not trading off of those charts. I guess you'd call it, quote unquote, my entry signals are on the 3-minute chart.
Okay. Got it. Yeah, cool. Alex, would you mind talking about one of the setups which has been working best for you as of late? Maybe one of these intraday breakout trades? Yeah.
So again, even going back to the scan being simple, I've really kind of learned that simplicity in what you're looking for intraday. I used to be really rigid, looking for drawing trend lines and being really rigid. Like it's got to touch heat. It's got to touch, the number's got to exactly touch that line if I'm going to buy either a dip or a breakout. But what I've kind of learned is watching intraday is flag patterns or pennant patterns, which are just simple, like a breakout and then a consolidation. And then that's kind of where I zone in. After something breaks out, I'm never the first one into a breakout. I don't think that probably happens like once or twice a year, and it's completely lucky. I typically wait for a chart to break out. Let's just keep referring to Bitcoin because it's fresh in everybody's minds right now. A chart makes a big move, and it kind of hits a high point, it pulls back, and that's where I get interested, because that kind of gives me an area where I can watch and say that's where people are either considering it to be the high of the day at that point, and there's maybe shorts that are using that as a kind of a buffer, and then looking for certain patterns in the order book. There's a big bidder step in. You can overcomplicate it, definitely, but essentially looking for a breakout, consolidation pattern, and then that next push. But it can get very detailed and the fine details that you're looking for within those patterns.
Yeah. How about indicators? Are you using any indicators? I think VWAP may be one that you use.
Yes, that's the only one that I use on every single chart. Well, I guess on the daily it doesn't really look that good, but every single intraday chart I have the VWAP on. It's a simple guide that I use. I don't overanalyze it. I know there's a lot to it technically, and a lot of people have written code for it, but I just kind of use it as a really quick gauge. If I'm going to pull up a chart that I'm not familiar with, that I'm not watching, where is it in relation to its VWAP? If it's over, theoretically, it means that bulls are in control. And if it's under, it means that bears are in control. But it's not always the case, but it gives you a quick idea to say, okay, the average person's holding this in their green, or it gives you a quick basis. And then I also use on my daily charts and hourly charts, the 50 and 200-day moving average. Not anything for any crazy reason other than I know a lot of people have that on their charts. And that's kind of really what tools are, right? I mean, they're just the fact that a lot of people are watching them, so they act around those tools for specific reasons. So I a lot of times use them as targets. So if I'm underneath on the daily chart, a 200-day moving average, but it's pretty close, and we're getting close to a breakout underneath that, then that's going to kind of be a target that I'm going to be shooting for to try to start taking some shares off or looking for a breakout through that. And at the same time, on a daily chart, if it's pulling back, I'm not a big dip buyer anymore. I've learned my lesson. I'm not really good at that. But if it starts pulling back into, let's say, the 200 or 50 moving average on a daily chart, then I start looking for intraday breakouts off of those levels. So that's all I use.
Yeah, and I'll just point out that I think you wrote an article about, or you posted something on your blog about how you actually use VWAP. So if anyone's interested in a slightly more detailed explanation, maybe check that out. I'll put a link to it in the show notes. Now, one of the things which I think you're really good at is actually trade management. So once you get set in a trade, can you talk to us about some of the things which go through your mind, as in, like, how do you manage this position from that point? Again,
it goes back to what some might consider a strength, others might consider a weakness. So for me, I'm really consistent. I don't take a lot of big losses. So when I enter a position, because primarily what I trade is breakout trades, but it doesn't always mean that I'm trying to like a 52-week high or something like that. It's patterns within a day. If I'm looking for a breakout, and I have learned, last time we spoke, I was really big into scaling into trades and scaling out of trades. What I've learned over this last 6 months is that I'm much better just going full size, one bullet into my trades. So when that happens, as soon as I enter a position, I know exactly where I want the breakout to happen. If it doesn't work, I know exactly where, hopefully, somebody in the order book's out there that I can get rid of my shares to. So as soon as I put on a trade and I get a breakout, I'm instantly selling some shares. And that may hurt me at sometimes because it could go up another 50% and I sold it for 2 or 3% or partial, and then I'm scaling out on the way up. But that's a big part of my trade management is taking some risk off right away, reducing those emotions, letting me have a clear head. Once I'm in that trade, if I get the breakout, I'm very aware that there's false breakouts. And as soon as you get that, everyone's loaded on one side and they break down. So literally as soon as I put on a trade, I have my first order ready to execute on a sell. And most of the time, luckily, I can get the first scale as a profit. And then I am prepared right then and there to completely sell my position, even at a tiny loss or at a slight profit, because I know breakouts fail, and I'm just really trying to capture something on every trade. And then once that position goes, the thing I've been really working on managing trades is getting a bigger position size and trying to hold a little piece a little bit longer. So if my target, going back to what we said before, is the 200-day moving average, but I'm a substantial amount away, I'll take some just right off the bat, off that breakout, and then I'll slowly scale out of my position to where typically I'm at like a fifth of my size when I hit my final target. I wish I could just man up and go for more and go for a fuller, bigger position towards those targets. But that's kind of how I manage trades, is I basically put on my max risk right away, and I start taking that risk off as soon as I can.
So let's say if you are sort of trading towards a point where you think is a good point to get out, like have your entire trade off the book, how willing are you to change your mind as things play out? Like, are you kind of reading price action as the trade is in motion, and if it looks like it might be turning around a little bit, like how willing are you to kind of give it room to breathe and move around, or are you just cutting the trade?
Most of the time I'm cutting the trade. And that's my risk aversion right there. And that's something that I continue to work on, is knowing when I should let it wiggle more and when I should give it a longer time to run for a target. But typically, let's say a lot of it has to do with reading the chart and the order book and flow. And let's say there's just so much buying going on at a certain level, but the price isn't moving. It's just a sign for me to say, look, they may bust through this wall. They may keep pushing it and it could go higher, but I've just got to protect myself. I've always got to just look out for protecting myself. And I usually just start scaling out. And I don't typically, if it doesn't go right where I want to go right away, I don't just typically slam out of my whole position, but I start lowering risk. And when I don't do that and I try to go for more and it pulls back, I just get that kind of ticked off feelings. Like you said earlier, I'd rather be out of it. I'd rather wish I was being in a trade than wish I wasn't in a trade. So I just start scaling out, and doesn't always work in my benefit, but that's kind of keeps me consistent.
Cool, man. Well, let me ask you, what's on the cards for the next 12 months? Like, what are your big kind of goals for 2018? Where do you want to take this?
Continue to scale, and perfect little things here and there. So I've noticed that the biggest changes are really just making a few small changes have a huge impact on the P&L in the grand scheme of things. Trying to continue to get into larger positions. And I would love to find different areas to trade, different, larger markets or more liquid markets. But I'm still keeping my eye on the prize, waking up every day and looking at just what I did the day before, doing it all over again, just a little bit better. Trying to get more comfortable with bigger swings in those profit and losses, and being not getting overexcited on any either direction. Yeah, I guess just trying to get a little bit better.
Nice, man. Eye on the prize. I like that. That's very good. Do you have one tidbit, one piece of wisdom, just a lesson you'd like to pass on or share to younger traders coming up?
Well, I did have one of the questions that I really liked. Well, I guess I kind of addressed both of them, but I'll readdress them, because I got a question like, what are some of the habits of a really profitable trader or a consistently profitable trader? And I just really did want to harp on the self-discipline and the flexibility part, because I know that was a huge turning point for me, is whenever you're going to slip up, you're going to make really bad trades. But the self-discipline's so important to keep yourself on the right track, to know, at least if you're doing something wrong, at least know that you're doing it wrong, and try to make the right adjustments, and being flexible. I think a lot of people get into trading and they want something. They either want to make really big gains, or they want to be a hot shot, whatever. or options trader or whatever. But if you realize pretty quickly it just doesn't fit you, you got to be flexible. And I think that's what a problem a lot of new traders have is they kind of see one mold, it doesn't work, and either they give up or they lose a lot. So I wish people would really hammer down on that self-discipline, because I get a lot of the same questions all the time of people messing up over and over and over and over and over again about the same things. But at some point you gotta make some big changes there.
Yeah. No, I appreciate you sharing that, man. I'm glad you addressed that. So yeah, let's wrap things up there. I do want to say it's been really good catching up again. It's been really cool to see your progress. I'm really proud of you, man, and I wish you all the best moving forward. Still, so where can listeners go to find out more about you? I know you've got a blog that you've put together, and you're also on Twitter. Do you want to share those couple things?
Yeah. So my Twitter's Tagger Trades, TAGR Trades. Don't keep up with it as much as I used to. Maybe I'll come to and get back into it, but recently about to have almost a 4-month-old daughter now. So my life has been strictly trading and then that. But then I also have the blog. Geez, I haven't even gone in a long time. It's taggertrades.com. There's some interesting stuff in the past, but I'll try to keep a little bit more updated for everyone in 2018.
Yeah. Oh, you're a busy man. You've got to focus on what's most important. So
yep.
Yeah, keep doing you, man.
Thanks as always, Aaron.
Yeah. Thank you very much for sharing. We'll talk again soon, I'm sure.
See you, man.
You've reached the end of this episode of Chat with Traders, but rest assured there are more episodes loaded with real market insight and zero hype on the way soon. So to stay updated with each great new release, subscribe to the podcast in iTunes, and we'd love it if you'd leave a rating and review. We'll catch you next time on Chat with Traders.